Add them all up, and a senior who qualifies could be handing over more than $10,000 a year in bills that the law says they do not have to pay. Not a discount, not a smaller version of the same bill, the whole thing gone legally. And the reason most people are still paying is not because they are careless, not because they are uninformed, and not because the money does not exist. The reason is that nobody has ever sat them down and said the words out loud. You do not owe this anymore. You turned 65, the rules changed, and the institutions collecting that money from you have absolutely no obligation to tell you that they changed. Some of these programs have been sitting in the law for 20 or 30 years. Others were updated or expanded in 2026, which is exactly why people who checked 5 years ago are still getting the wrong answer. The ground shifted under them and they did not feel it move. I am not talking about a senior discount at a restaurant or 10% off a movie ticket on Tuesdays. I am talking about bills you are legally exempt from. Bills where the correct answer is not to pay a smaller amount but to pay nothing at all. Where the law has already made the decision for you and all that is missing is the paperwork. By the end of this, you are going to know exactly which bills fall into that category, who qualifies for each one, and the single reason that most people who qualify never collect a dime. Let me start with the one that is most likely pulling money out of your Social Security check right now, this month, before that deposit ever reaches your hands. Every month, $202.90 is deducted from your Social Security payment before you see it. That is the 2026 Medicare Part B premium, and it disappears so quietly, so automatically, that most people have simply accepted it as permanent. The price of having Medicare, the cost of being on the program. But there are programs funded by your state and the federal government together, whose entire reason for existing is to pay that premium for you. Not help you pay it. Pay it. The full $202.90 every month put back into your Social Security check for as long as you qualify. They are called the Medicare Savings Programs, and the number of people who are eligible for them and have never once heard the name spoken out loud is enormous. The most comprehensive version is called QMB. At this level, if your income as a single person is under roughly $1,350 a month in 2026, the program covers your Part B premium completely. It also covers your Part A premium if you pay one, your hospital deductibles, your co-payments at the doctor, your co-insurance. Everything that usually comes out of your pocket on top of Medicare itself. Gone. And the moment you are enrolled in QMB, the federal government automatically enrolls you in something called Extra Help, which dramatically cuts what you pay for your prescription drugs, your pharmacy copays, and the premium on your Part D drug plan. The government values Extra Help at around $5,700 a year. Add that to the $2,400 from the Part B premium being covered, and a single application for a Medicare savings program is potentially worth close to $8,000 a year, every year, repeating. And the people who qualify for it most often are the people who have never once heard the name. If your income is a little higher, up to around $1,616 a month as a single person, there is still a version called SLMB that covers the Part B premium and nothing else. $2,400 back in your check per year from one form. And above that, up to around $1,816 a month, there is a version called QI that also covers the premium. The income limits on all of these are higher than most people expect. They shift every year, and in 12 states, the asset test that used to block people from qualifying has been eliminated entirely. Your savings account balance does not disqualify you in those states. Your home does not count. The mistake most people make is talking themselves out of it before they ever pick up the phone. You apply through your state Medicaid office or through Medicare directly at 1-800-633-4227, and I am going to put that number in the description below so you reach the real program and not someone pretending to be it. The second bill is property taxes, and for anyone who owns a home, this one may be worth more than everything else on this list combined. But before I get into the specifics, I want to say something about the way this one works because it is different from the Medicare benefit in a way that matters. The Medicare savings programs are income-based, most of them. The property tax exemptions in a surprising number of states are not. Your age is the only qualification, not your pension amount, not your savings balance, not whether you still have a mortgage, your date of birth. Which means there are seniors in this country with comfortable incomes and well-funded retirement accounts who are still paying full property taxes on their homes simply because they did not know they were allowed to stop paying them on their 65th birthday. And there are homeowners who checked the income-tested programs years ago, decided they earned too much to qualify, and never realized there was an entirely separate age-only exemption sitting right next to the income-tested one on the same form. The second bill is property taxes, and for anyone who owns a home, this one may be worth more than everything else on this list combined. Not this year alone, over the life of the exemption. Nearly every state in the country offers people who are 65 or older a specific legal mechanism to stop their property tax bill from climbing. Some states offer what is called a senior freeze. The moment you apply and qualify, the assessed value your home is taxed on is locked in place permanently for as long as you live there. Your home can appreciate. The neighborhood around you can boom. Your neighbors can watch their bills climb by $300, $400, $500 a year. Yours stays exactly where it was the year you filed. In states with fast-rising home values, that freeze is worth thousands of dollars per year and tens of thousands over a decade. In Texas, the school property tax portion of your bill is frozen the year you turn 65, with no income limit whatsoever. Your age is the only qualification. A homeowner who turns 65 in a fast-appreciating neighborhood and never filed for that freeze has been watching money leave their account year after year that the law said was not theirs to pay. In Florida, the base homestead exemption of $50,000 stacks with an additional senior exemption of up to $50,000 more in counties that offer it. In New York, the Enhanced STAR program and additional senior exemptions can reduce the value your home is taxed on by amounts that translate to hundreds or thousands off the annual bill. In New Jersey, a program launched in 2026 combined the senior freeze and the anchor benefit into a single unified application, making it dramatically easier to access both at once. Every state has something. The name is different, the amount is different, but the structure is always identical. There is an age, usually 60 or 65. There is sometimes an income limit and sometimes no income limit at all. And in every single case, without exception, the savings do not happen automatically. Your county assessor knows your date of birth. Your county assessor knows the assessed value of your home. Your county assessor has all the information it would ever need to apply that exemption on your behalf the day you become eligible. It will never do that. Every dollar of tax relief your county grants is a dollar of tax revenue it loses, and local governments do not lose revenue voluntarily. You have to file. One call to your county tax assessor asking specifically what senior exemptions exist for homeowners over 65 and what it takes to apply starts the process. In many counties, you can apply retroactively for at least 1 or 2 prior years, which means every month you wait is not just a month you miss going forward. In some places, it is a month you cannot get back. Let me also be direct about something else before we move on, because this is the bill where people most often talk themselves out of applying before they have ever actually checked. The income limits I have given you are the official published limits for 2026. They are higher than most people assume. And in the states that have eliminated the asset test, your home equity, your car, and a reasonable amount in savings do not count against you at all. The mistake is not failing to qualify. The mistake is deciding you do not qualify before you have ever sat down with the actual numbers and the actual rules for your actual state. The 5 minutes it takes to call your state Medicaid office is the only way to know for certain. And the worst possible outcome of making that call is that they confirm what you already assumed, and you are exactly where you started. The third one is your federal income tax. And this is the one that runs deepest against a belief most Americans carry their entire lives. The belief that everyone owes something every April. That the question is never whether you owe, but only how much. For a very large number of seniors in 2026, that belief is not just outdated, it is costing them money. The correct federal income tax for a senior whose total income falls below a specific threshold is not a smaller number than expected. It is 0. And the reason it stays hidden is not that the law is complicated. It is that the form does not automatically ask your age and adjust the calculation. Someone has to know to enter the right deductions, and if they do not, the return calculates the wrong bill, and the check gets written for money that was never owed. Here is what stacks together in 2026. The standard deduction for a single filer is $16,100. The moment you turn 65, an additional deduction of $2,050 is added on top. Those two have been in the tax code for years. But starting with the 2025 tax year, a new layer was created by the One Big Beautiful Bill Act, confirmed by the IRS in their own guidance published in February and April of 2026. It is called the Senior Bonus Deduction, and it is worth up to $6,000 for a single filer who is 65 or older, or up to $12,000 for a married couple where both spouses qualify. Stack those three layers together and a single senior in 2026 has $24,150 of income shielded from federal tax before a single dollar is counted. A married couple where both spouses qualify shields more than $47,000. For a senior whose income is a Social Security check, a modest pension, and a small withdrawal from savings, the math often lands at zero. Legitimately, legally, completely zero. And here is the cruelest part of this one, because the bill is not just hidden, it is reversed. The law is not asking you to pay, the law is telling you to keep the money. But unless the return is prepared correctly, with every one of those age-based layers properly applied, the form quietly produces the old calculation and the old result. The check goes out, the money leaves, and nobody calls to tell you it was a mistake. If someone prepares your taxes, the single most valuable question you can ask them before you sign anything this year is whether your full age 65 deductions were applied, including the $6,000 senior bonus deduction from the One Big Beautiful Bill. You have the actor to that answer, and there is urgency here that does not apply to the other bills. As the law is written right now, that $6,000 bonus only exists for 4 tax years, 2025 through 2028, unless Congress votes to extend it. This is not a someday situation. This is a claim it every single year for 4 years and do not miss one. There is also a quieter version of this same mistake that catches people who set up withholding on their Social Security check when they first enrolled and never touched it again. You chose a percentage, maybe 10%, maybe 12% just to be safe, and since then a piece of your monthly check has been going to the government as a prepayment on a tax bill that may no longer exist. That is not a tax being paid, that is an interest-free loan to the Treasury made automatically out of nothing but inertia. If your actual tax liability after the correct deductions is zero or near zero, adjusting your withholding using a new W-4V gets that money back into your monthly check immediately and every month after. The fourth bill is the one you pay at the pharmacy, and for people on multiple medications, the number that changes when you access this benefit is not small. Even if your income is slightly above the cutoff for a Medicare savings program, you can still apply separately for extra help through Social Security directly, without going through the state Medicaid office. Extra help has its own income limits, its own asset thresholds, and its own application process, and it stands alone as a benefit entirely independent of the full Medicare savings program. A single person with annual income up to around $22,500 may qualify. A married couple may qualify up to around $30,000. If you are approved, your pharmacy copays on covered drugs drop, often to a few dollars per prescription. The premium on your Part D drug plan drops or disappears. The point at which catastrophic coverage kicks in a bad year drops significantly. For someone managing 4 or 5 prescriptions every month, the math is not theoretical. It is the difference between filling all of them and rationing them. It is the difference between taking what the doctor prescribed and taking a partial dose to make it last. And no one should be cutting pills in half or skipping doses because of cost, when a benefit worth thousands of dollars a year is sitting on a government website with their name on it, waiting on nothing but a form and a phone call. You apply at ssa.gov or by calling 1-800-772-1213, and the application is one page. There is also a bill that lives inside your utility costs and arrives every month with the reliability of bad news and the invisibility of background noise. Your heating bill, your cooling bill, the amount you pay your gas company or electric company to keep your home livable through the seasons. There is a federal program called LIHEAP, the Low Income Home Energy Assistance Program, whose entire function is to help qualifying households pay those costs. The income threshold for most states in 2026 is roughly 150% of the federal poverty level, which translates to around $27,950 annually for a single person, and around $37,650 for a two-person household. For people who qualify, LIHEAP does not ask you to change your behavior or reduce your usage or install equipment or fill out quarterly reports. It reduces what you owe, and in many states, a single LIHEAP application automatically activates the utility company's own senior rate discount on top of the federal benefit, layering two separate reductions onto the same bill from a single form. Benefits range from a few hundred to over $1,500 per year, depending on your state and your specific circumstances. The reason most seniors have never applied is the reason they have never applied for most of the items on this list. They simply never heard the name. The fifth bill is the one that people have almost never thought to question because it has always been there, and it has always been paid the same way, and it has always felt like a fixed cost of modern life. Your phone bill. Your internet bill. There is a federal program called Lifeline that places a monthly credit on phone or internet service for households that qualify based on income or based on enrollment in other assistance programs. It will not erase the entire bill, but it reduces it by a set amount every month, month after month, on a service you were paying for regardless. And in a number of states, state-level Lifeline programs add additional credits on top of the federal discount, stacking the savings higher without a separate application. If your income is at or below 135% of the federal poverty level, you qualify on income alone. If you are already enrolled in Medicaid, in a Medicare savings program, in supplemental security income, in SNAP, or in several other federal assistance programs, your existing enrollment qualifies you automatically without a separate income check. You apply at lifelineprogram.com and then bring the benefit to any participating carrier. The sixth one hides in plain sight every time you log into your bank account and see the monthly maintenance fee posted with no explanation and no complaint from you because it has been there so long it barely registers anymore. $5, $8, $15, $25 a month depending on the institution and the account type. Every major bank in the United States operates a senior account tier, usually starting at age 62 or 65, that eliminates that monthly fee entirely. This tier is not advertised at the branch. A teller who helps you with your deposit is not going to mention it. No one is going to call you on your birthday and tell you it is now available. You have to call the number on the back of your debit card and ask specifically about senior account options and whether your monthly maintenance fee can be eliminated based on your age. That is the entire process. And if you carry a credit card with an annual fee, the same principle applies in a different form. The retention department of almost every major card issuer has internal authorization to waive the annual fee, issue a statement credit, or convert your account to a no-fee version without closing it. They do not offer this unprompted. You have to call and tell them you are considering the account because of the annual fee, and then you have to stop talking. What comes after your silence is very often the waiver you were looking for. The seventh one surprises people more than almost anything else on this list when they finally hear it, because the surprise is almost complete. In 22 states, your bank is legally required to provide notary services to its account holders at no charge. No charge. You have possibly been driving past a bank branch on the way to a private notary service and paying $5, $10, $25 per signature on documents that your bank was sitting there ready to stamp for free. Beyond your bank, your county recorder's office provides free notary services during business hours. Your public library provides free notary access. Senior centers across the country offer it on scheduled days. Social Security field offices will notarize certain benefit-related documents at no cost. The fee you have been paying was never necessary. It was simply the consequence of not knowing the free option was there. I want to tell you about someone before we close this out because the numbers I have been giving you are real and the programs are real, but the reason they matter is never really about the numbers. There is a woman in her early 70s, someone careful with money her whole life, who paid her Medicare premium every month for 11 years without questioning it. She had a modest income, a paid-off home in a mid-sized city, and a pharmacist who once mentioned in passing that some people got help with their drug costs, but she had never followed up on what that meant. She was not struggling in a way that felt urgent. She was just quietly paying more than she had to, month after month, for 11 years because no one had ever said the words to her directly. When someone finally did, and she applied for a Medicare savings program, the Part B premium came off her Social Security the very next month. $202.90 back in her check, and the extra help that kicked in automatically cut her monthly pharmacy costs from around $200 down to less than $40. She cried not because of the money, she said, though the money mattered. She cried because of the years. 11 years of paying something she did not owe. 11 years of nobody thinking to say anything. The programs existed the whole time. The eligibility existed the whole time. Nothing was missing except the conversation. Now step back and look at what every item on this list has in common, because it is the whole reason the money keeps moving in the wrong direction year after year. Not one of them turns itself on when you become eligible. The Medicare Savings Program does not apply itself to your account the year you qualify. The property tax freeze does not activate on your birthday. The senior bonus deduction does not appear on your return because you turn 65. Extra help does not start cutting your pharmacy bills the month you become eligible. Lifeline does not show up as a credit on your phone statement. The bank fee does not disappear when you hit the qualifying age. The free notary does not come to your door with a stamp. Every single one of these was written into law or policy to help you specifically, and every single one requires you to take the first step. The system is not hiding them behind a locked door. It is simply built on the very reasonable expectation that most people will keep paying what they have always paid, will accept the bill that arrives in the mail or post to their account, and will never once think to ask whether the rules have changed since the last time they checked. That expectation is correct more often than it is wrong, and billions of dollars in unclaimed benefits and overpaid fees sit year after year because of it. There is one more thing I want to address before the action steps, because it comes up every time this topic gets raised, and it deserves a direct answer. The question is whether these programs are actually still funded, whether the eligibility really works the way I described, and whether the people who apply actually get the benefit or end up caught in some process that drags on for months and never resolves. The answer for every program on this list is yes, they are funded. Yes, the eligibility works the way the rules say it works. And yes, the people who apply and qualify receive the benefit. Medicare savings programs are administered through state Medicaid offices that have been running them for decades. Property tax exemptions are administered by the same county offices that process your regular tax bill. The senior bonus deduction was created by federal legislation and confirmed by the IRS in their own published guidance. Extra Help is a Social Security Administration program that has been operating since 2006. Lifeline is a Federal Communications Commission program. These are not emerging programs with uncertain funding. These are established federal and state benefits with long operational histories, and the people who collect them include millions of Americans right now, today, who simply applied when they became eligible. The gap is not in the programs, the gap is in the awareness. And that gap is what this video exists to close. Here is the only thing I'm asking you to do before you close this video. Pick one. Not all 7 today, not a weekend project. One. The one that applied most directly to your situation when you were listening just now. If Medicare comes out of your Social Security check every month, the Medicare Savings Program is the first door to open because it is potentially an $8,000 door, and the application is a single phone call to your state Medicaid office or to Medicare directly. If you own your home and you have never applied for a senior property tax exemption or freeze, Call your county assessor this week and ask what programs exist for homeowners over 65. If your tax return was filed this year and you are not certain whether all your age-based deductions were applied correctly, pull the return out and look, or call whoever prepared it and ask the specific question. If you take prescriptions every month, go to ssa.gov and look at the Extra Help application. One page. If you have been paying a monthly maintenance fee at your bank for years without question, call the number on the back of your card this week and ask about senior account options. You do not need an expert for any of this. You do not need to hire anyone. You do not need to navigate anything that is more complicated than a phone call or a single form. What you need is to know that these things exist, which you now do, and to decide that one of them is worth following up on this week. The money has not gone anywhere. It is in a program that is still funded, still accepting applications, still waiting. It has been yours the whole time. The only thing that was ever missing was someone saying the words out loud. The programs are real. The eligibility rules are real. The money is real. And the thing that separates the people who collect it from the people who keep paying is not a complicated calculation or a particular skill or any kind of luck. It is information and the decision to act on it inside the specific, modest, one phone call window that opens up when you finally have it. You made it to the end of this video. You have the information. The window is open right now. What happens next is up to you. And before you go, do one thing for me. Think of one person in your life who would never believe any of this is real. Someone careful. Someone who pays every bill that arrives without question, because that is how they have always done it, and it has always worked out fine. Someone who would say the government does not just give money back for no reason. Send them this video today. You do not have to explain it to them. You do not have to convince them of anything. Just send it and let them hear it for themselves. There are very few things you can put in another person's hands that have the potential to change what lands in their bank account every single month for the rest of their life. This is one of them. The programs are real, the money is real, and the rules that make all of it possible are sitting in the law right now in 2026, waiting on nothing but the decision to go use them.